Happy Friday, traders. It's 8:01 a.m. Chicago time on the 24th of January, 2020. This is episode number 1678. Thanks for joining me here again today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is on risk on mode. The DAX has jumped quite a bit overnight. Let's see, it's pretty close to its highs, I think. Yeah, it's only about 10, 12 points from its highs, up 202 points or 1.5% on strong numbers out of Germany. Um, the overall sentiment is to the risk side. Crude oil is a laggard. Crude's trading at 55.07, down 52 cents or almost 1%. Gold is off. Gold's at $1,561.80, down $3.06 or 0.23%. The rest of the market really the rest of the products I'm watching are up, including the bonds up 13 points, and the notes, U.S. notes, 10 years at 4.5 ticks. The bonds are up 13 ticks. And so overall, it just seems everything is up, and we're near all-time highs in the S&P. We managed to almost test the all-time high overnight. It's as if the gap down didn't happen. Overnight, the big news is that fears over the coronavirus subsided after the World Health Organization declared the virus an emergency only for China and not for the rest of the world. Along with the ease in virus worries, European stocks also got a boost from reports showing a rise in Germany's services activity in January. And that's really what appears to be driving things. Who knows, though? Who knows the reason behind these things? But that's what we've got. In terms of so sentiment to the upside, in terms of what's left, we have very little left on the calendar in terms of what is scheduled. We have market services PMI, composite PMI, manufacturing PMI, all coming out at 15 minutes after the open. 15 minutes after the open today. Nothing scheduled for Sunday night, my time, and Monday we come in with the German IFO business climate as the first key number to be released on the scheduled calendar. Let's take a look at what we expected versus what we got. Oh, shoot. All right, well, hang on 1 second. I do this sometimes. I close the wrong window, a window that I need. Always trying to keep an efficient desktop. And here's a wonderful ad by YouTube. All right, so here's what I've got in terms of a review. Okay, so the review segment. Yesterday, the expectation is for the market to, scoot down a little bit and take a bounce, become impulsive, get back up into the 1921 area, and then walk itself back to 24. That's the primary scenario. The secondary scenario is responsive buying up into 1819 to sell off down to 03. These two didn't really play out as planned. Here's what actually happened. We overall we had an open test up into 1516, and then we sold off, and we ended up pushing right into that 3307 and then 3303. And then the market bounced off of 01 and a quarter, just ahead of the century figure. There was quite a bit of liquidity down there yesterday. And then the rotation up was relatively strong, pushed all the way to the other side. And then ended up testing. So the pattern here is open, test, drive. okay? Bounce up around the 1703 area, and then it got to 3301, and then, you know, squeezes itself all the way to the opposite side of the range, and then it squeezes itself all the way down. At this point, once I saw this rotation here, looking for short target IB low into 3,300 and then 3296 for the bounce back up and a return to the middle. That was what was expected. That was the scenario that kind of constructed itself in real time, and instead it pushes almost to the low back to 3303, and then it just walks itself and finally breaches the IB to complete the IB stat. And then we end up squeezing back up and forming this high volume node around that 24 area. Remember, 24 is somewhat of an MC VPOC, as well as last week's close. 24 has been in play quite a bit. And so you can see here that it's back and forth, pretty aggressive rotations there. Right here, you can see them very clearly. These rotations are quite aggressive. Just, you know, ping pong back and forth, 2.5, 3 points. And then it ended up closing near highs. We have a normal variation day, not really a double distribution, but we do see a high volume node, a nice little trident type thing. So the profile from yesterday really indicates the market was bullish into the close, but there was pretty active trading all the way through. And then currently we're trading at 33, 31 and a half, following the release that just came out, which dropped us a little bit. So overall, it's a market that's again buying the dip, and the bounce is back, and we are back bullish overall on our perspective. Here's the order flow map, the heat map on ctbookmap.pro. Looking at the map, overall, this is the release of the German and French numbers. And then since then, the market's just been sideways, really, and not much going on here. My suspicion is it would likely squeeze itself back up and start testing that all-time high. Better liquidity above than below, and we're stuck in a kind of a dead zone right now. Going back to reviewing the charts, here's what the overnight session looks like. Pretty quiet. You know, we end up pushing immediately higher on the open. Remember, the auction here was interrupted by the close, and then it ends up testing the prior day's close. Overnight inventory is long, holding sideways against VWAP mid and the low volume node at 3075. And as long as this area holds here, we're likely to take out this 37 and then a 3750 all-time high for a squeeze into 40, and then the liquidity areas above 40, 42, and 44 come into play. Okay, so that's how things are shaping up. Before we get into today's scenarios, I want to remind you that it is Like Friday. Please take a moment to find the like button on YouTube. If you're seeing this video on our on the Convergent website, just to click on the YouTube icon at the bottom, go to YouTube and hit the like button if you would. So let's take a look at what we're expecting for today. Here we go. So, as I said, we're opening in this kind of tight area. Remember from the overnight session, 3330, and then we have the high, and then and then we have a key low volume node down here in the 16 area. Remember 16, 16 and a half. uh, 2 sessions ago. The open, we have a gap open, gap rules. The gap distance is pretty small. The expectation is it's likely to revert back, poke, push up, come back into the open, squeeze through that 37 overnight high, and then flush through the 37 50 to consolidate around the 40 area, and then ultimately push up into these new all-time highs to square up on the close. So that's the primary scenario that kind of follows the overall sentiment to the market. The secondary is an open that immediately squeezes the all-time high, pushes through 37, gets into 40, attempts to flush through 40, comes back with a almost kind of like this scenario, comes back with an impulse down back to the open, and then squeezes down into 29 and back into the prior range for a test of that 24 area, and we close near last week's close. Again, as I said, all of this week, I'm seeing signs of capitulation by buyers near all-time highs. So scenario 2 wouldn't surprise me as an equal to scenario 1 today. I'm prepared for both. And that's how things are shaping up. So yesterday really was a buy the dip kind of situation, and the market did that. Yesterday we opened and squeezed down, and we were not able to maintain those lower prices, and we come back up. This will give buyers the confidence to keep squeezing higher. So the key kind of over underline for the big players keeps rising and rising and rising. We keep staying above it. In my opinion, we continue to squeeze higher towards that 45, 48 area. So we'll see. Unless news comes out, the market's habit is to continue to push higher, and who are we to say that the flow should change until it does? Okay. Good luck today, and I'll catch you on Monday morning. Take care.